Hey everybody, welcome to our September 6th edition of Wall Street Winners. Let's dive right in. And as we have been predicting and telling you, we're in a bear market and we're starting the new bear leg down. The real issue is how far down is it going to go? And we definitely have another month of downside. So we just, at this point, we don't know how far down it's going to go. I'll start doing some work and trying to figure out where it'll stop. But right now we know a lot more about when it's going to stop, and probably towards the end of October. Now look at the purple predictor here. This is one of the things that tipped me off. We had the price make higher highs, but the purple predictor did not, which showed that the smart money was selling into this rally. And would you rather be the smart money or the dumb money? Well, I know where I want to be, so I'm following the smart money. One of the critical things here is notice that the purple predictor, the on-balance volume, is making new lows for the year. The smart money is selling, selling, selling. Dumb money is still holding out hope that the bull market that we had in the summer is going to continue. But of course, dumb money exists in the market for the smart money to take it from the dumb money. So we'll follow the smart money, and that means we're going to see the market move lower. Dow Jones, let's take a look up here in the upper right-hand corner. Selling pressure, that's the little red line, jumps up a lot, came down a little bit on Friday, but and then buying pressure just died. The fact that the black line moved up, that's the ADX, that confirms the fact that we're in a bear market. Now, one of the things that's interesting here, one of the tip-offs that this was the high, I pointed this out to you at the time, was here's this RSI, and it got above 70. You can see it got a solid color. Last time it got above 70, that was a great high point. But the same thing applies on the downside. Here we are down at 30. That was a great buy point. 30, great buy point. 30, great buy point. 30, great buy point. We're almost there. In another week, we'll get down to that 30 level, and that'll probably cause a little sharp rally, suck more dumb money into the market so the smart money can take it from them. So look for a bit of a rally here, not this week so much as maybe towards the end of this week, early next week. Over here, you can see the smart money is even worse off here. Once again, multi-year lows in the purple predictor here, and you can see it's collapsing here in the NASDAQ. So my thesis all along has been sell NASDAQ type stocks during this rally. You heard me say it over and over again. And then I said, no, we want to buy NASDAQ type stocks for this rally. And now what I'm saying is we want to sell NASDAQ type stocks here. So Dow, old economy, outperformed during the bear moves, and we're in a bear move right now. Bull moves, I want to buy those sexy biotechs and high techs and meme stocks and Bitcoin and stuff like that. Speculative type stuff you want to buy in the bull moves. But we're not in a bull move, so you got to sell all that garbage. Seasonality never really got going here. We're in a neutral period, so that's okay. So we're just not going to buy until we get into October, and then we might start to see a good seasonal rally in this market in October, November, December. We'll keep you posted, of course. But you can see this is the IWM. These are small caps. Purple predictor, not as bad as in the big three indexes. You can see we haven't making a new yearly low, but it's starting to collapse. Now the Utes, we broke above my buy signal here, but then we just sagged right back down. So even though we are in a bullish period and will be for the next 2 months, Utes can't get out of their way, so we're not going to get long Utes. Here you can see the red line has worked out the best so far this year, so we're following the red line. Red line says we'll chop a little bit this week and then take another dump, a little bit of a rally. There's the rally that might be triggered by getting down to 30 that I showed you earlier. Get a little bit of a rally and then hammer down towards the end of October. Sounds reasonable to me. Asset allocation, we saw people, they sold the stock market, bought bonds, This is part of the theme. People are going towards less risky assets. They're buying bonds. They're buying dividend-producing stocks. Well, you can see Utes have held up very, very well. They're not really great, but they've held up really well. So there's this buying of the stock market. They're selling the stock market and buying bonds, and inside the stock market, they're moving more towards less risky stocks. And of course, that would be the old style Dow stocks. They have a dividend, they have a balance sheet, whereas the sexy NASDAQ stocks have no balance sheet, no dividend, no assets. They're all intellectual property. Global shares we got short a week ago. You can see that worked out beautifully. I think global shares are going to underperform the U.S. stock market. We sit here and we read the newspapers and we see 9% inflation. It's worse over there. We look at ours and we see political problems. It's worse over there. And they've got a war on their doorstep. U.S., I don't think Canada or Mexico are invading the U.S. So Europe, really in bad shape. Yield curve stable at a low level. We've hammered on that enough. You can see bonds are going down. Now, I think bonds are going to go down again. So let me go back here. If bonds go down, that means interest rates go up. Now, let's go back over here. So you can see that bonds have been going down now for over a month. That means interest rates at the long end of the yield curve have been going up. But we can see that the yield curve, it's not going up. It's flat. Why? Because the Fed is raising short-term interest rates as fast as the market is raising long-term interest rates. So all interest rates are rising and the yield curve is staying flat. This is bearish for the stock market. This is bearish for the economy. And it's not getting better. So anyway, all right, here we can see here, most of our indicators here are telling us that bond yields are going to continue to move higher. We know the Fed is going to raise interest rates higher, probably 0.75% at our next meeting. So bond yields up, short-term yields up, yield curve is going to stay about flat. Now, but if interest rates are going up, that means the dollar is going to be strong. We've been saying this for weeks, pounding you over the head with a 2x4. Now, those of you who are not Americans don't know what a 2x4 is. Well, I don't. That's a piece of building lumber. I don't know what it is in centimeters. Sorry. Okay, gold. Well, of course, if the dollar's up, gold's got to go down. We're coming up here into wedding season. The rally that we'd normally see in August was pathetic. So when you see a bullish factor fade, that's very bearish. Got to be short gold. I mean, look at this. We were up at close to 2,100. Now we're down at 1,700-ish. This is a bear market. And our indicators remain pretty much neutral on the top one, but negative on the other two. Crude oil. I think, like I say, the supply is relatively tight. That's the bull news. You can see the purple predictors a bit bullish. So that's bullish. But as we go deeper and deeper into this recession, I think that the demand will decline faster than the supply will be tightened. So I don't have a position here in oil, but if I had one, I'd say sell a break of these lows down here. That would probably be the right thing to do. Bitcoin, we got short Bitcoin and making a little money so far. Purple predictor remains negative. The trend is clearly bearish. We did have this long, sluggish bull move here, but we're starting another stair step down. So as the stock market goes down, particularly the NASDAQ, you're going to see all speculative assets such as meme stocks and crypto and real estate and all the things that were bubblicious last year, pop, see you later bubbles. All right, freebies, love having you here. I want to tell you about a concept that we call extreme profits. I'll tell you what it's generically called in a second, but this is the most powerful risk management tool ever invented. Now, normally I use a technique, and what I teach in most of my courses is a technique called fixed fractional. And I teach that technique for a very simple reason. It's the best balance between a risk and reward, the best balance. But extreme profits, this technique is not about balance. It's about extreme profits. So it's kind of insane, but it does lead, it can, if you do it right, you have to do it right. So there is a caveat there. You have to do it right, and then it becomes the most profitable system ever. Now, this is based on research by John Kelly, who was a Bell Labs scientist, and it was perfected by my friend Ed Thorpe, who was the guy who really popularized card counting in blackjack. And it's called the Kelly formula. You can Google it and you can learn quite a bit about it online. And what the Kelly formula does, though, is it's not designed for this balance between risk and reward. It's designed to maximize profitability. Maximize profitability. So it turns risk management from a defensive weapon into an offensive weapon that you can wield to maximize profitability. Well, it's, nothing is for free. So the bad news with this technique is that there's much higher equity volatility. If you did it the way Kelly and Thorpe used it, you could see your account drop 50% in one day. Now, that's not the way I use it. I've completely modified it so that it's far more relaxed. Still higher equity volatility than I'd normally have and what I normally teach, but much less than the way it's taught by John Kelly, Ed Thorpe, etc. The good news, if done correctly, it can lead to dramatically higher profits. I said a second ago that you could lose 50% in one day. Yeah, but you could also double your account in a day as well. So, as you can see, it's dramatic in both directions, but do it correctly. Now, the Kelly formula was actually invented for as a formula, John Kelly, to how to get more information to go through a copper wire. He worked for Bell Labs, and so they were trying to figure out how to get more information to go through a copper wire. But then guys like Ed Thorpe and other mathematicians came along and realized that it could be used for gambling and it could be used for investing. And Ed Thorpe built a tremendous career as an investor. I wouldn't even say he was all that good of an investor, but he used the Kelly formula better than anybody I've ever seen. So that's what it's all about. Now, hang on. See, I'm going too fast. I'm too excited. So how can you get this? We've put together a course on extreme profits. I used many years ago. I did a course quite often. It was a $5,000 course, and we did it on futures and Forex, and it was incredible. I mean, it was just an incredible course that cost $5,000. Well, what we've done is we've now adapted this for stock traders. This is amazing. Nobody's ever taught anything like this ever. Now, in order to get this, you have to join the Wealth Builder Insider Membership Program. And that's a modestly priced monthly membership program. I'll show you the URL in just a second here, and you can click on it. But you get this course, which we're posting pieces of it every day now, on the website. You get that, but then you get the most extensive education on stock and option trading in the world. This membership site, well, I'll be frank with you. The problem with it is that there's too much. You get too much. So we even had to add a section on how to actually attack the website, because it's going to teach you asset allocation, stock selection, swing trading, position trading, multiple techniques for stock selection, ETF trading, everything. It's really, quite frankly, a bit overwhelming. So the very first section, which we call the hub, tells you how to attack it in a logical manner, depending on what you're most interested in. And of course, we also have options trading on there as well. And that's all for one low monthly price. This is like getting 10 PhDs for a peanut. So where can you get this? Well, it's pretty simple. You just go to wealthbuilderinsider.com. Wealthbuilderinsider.com. You don't need the capitals, but I just made it capital so you can read it easier. But go there, check it out. Remember that what's not on this website here is we've just added our Extreme Profits for Stocks course inside the Wealth Builder Insider. All right, everybody, go there now. I'll see you inside.